Welcome to DeFi by Design, where we talk all things blockchain and cryptocurrency while striving to educate, empower, and enrich.
Hey guys, welcome back to DeFi by Design. This is our 5th episode. I'm really excited to have our guest on today. His name is 𝗵𝗵𝗶𝗃𝗵𝗃 𝗵𝗵𝗃. I hope I got that right. Definitely, correct me. I think I screwed it up, but we're really excited to have you on. Evgeny has told me he likes to do a lot of things outside of Zerion, but we're really excited about this smart contract aggregator. It's really cool because it can pull together your MetaMask, your different assets, and give you that one central place to view your portfolio, view as it increases and as you deposit and withdraw. We also have Andy, my co-host. Andy, how's it going today?
Yo, it's going well. I'm prepared to mess up Evgeny's name a million times, but we're here for it, and we're having a good time. How you doing today, Evgeny?
Thank you, guys. I'm really excited to be here. Just to be clear, I know my name is tough, but let's try again. So it's Evgeny Yurtayev.
Evgeny.
Yeah. But Andy, you got it right.
Evgeny.
Okay, easy.
Just think of that officer from Call of Duty. That's going to be
right. Awesome. Yeah, so like I said, we're really excited to have you on. I think we can dive right into it. Could you give us like that 1-minute elevator pitch? What is Zerion? What do people use it for? And how does it work with other protocols in this DeFi space?
Sure. Happy to do that. So first of all, you said that it's a smart contract aggregator. I would say we usually call Zerion as a DeFi interface. So that's the first premise we started with. The number of protocols in the DeFi space has been exploding recently, and the number of assets as well. And the whole space is super fragmented. And in order for like a normie or even like a DeFi pro or yield farmer to aggregate and find at least just like a single number which would represent the total value of their portfolio, they would need a special instrument. So usually like before Zerion, people would just go to like a spreadsheet and put everything there themselves and try to keep track of all the prices. But as the space evolves and as more and more protocols appear, there's like virtually impossible to do that. So essentially Zerion covers people like that. So we allow people to track everything DeFi related, all the yield farming, staked assets, all the different shit tokens and normal tokens as well, etc. So it just allows you to see an overview of the whole stake you have and draw more insights from that.
Nice.
Right. So effectively, if I'm coming into DeFi space, I want to kind of get my feet wet, and I'm looking for a platform to kind of keep me all in one area and kind of not all spread out all over the place, having this there, that in that wallet, that in that platform. Zerion can really kind of bring us in. So where did this idea come from? Do you have a strong background in Ethereum and crypto? Kind of how did you come to this idea of Zerion, and like with your background, how did that all kind of play out?
Yeah, sure. So actually the Zerion idea was a long evolution since the beginning of the whole Ethereum story, essentially. I met my current co-founder and CTO, Alex, at one of the hackathons in Moscow about blockchain. So we won one of the ideas, and essentially we just got our hands dirty with the Ethereum stuff and smart contract stuff. And since then, we have been working in the space. So that's been a long journey now. So more than 5 years up to date. And Zerion initially started as a company to help build out different ideas in the Ethereum space. So we were helping people with the smart contracts and implementing their different ideas. And essentially, we built out this huge infrastructure that would track everything Ethereum related, kind of like this data layer that tracks all the tokens and all the deposits and transactions, etc. So that architecture was useful for many different things, but it ended up being super useful for the DeFi space. So essentially when the DEXs saw huge growth as well as new protocols like Maker appeared, they were way more complex than just token transfers. And essentially our infrastructure allowed us to scale up to support DeFi. And we were just ourselves super excited about DeFi. In the beginning, it was just Uniswap and Maker and nothing else. And when the term was announced, it wasn't really highly. It was debated first of all. So people were thinking, is it open finance or DeFi? I was always in for DeFi.
Hell yeah.
Yeah, just it sounds cooler. So essentially, the idea came from the fact that we tried using Maker ourselves, and it was at a time it was 7 transactions to do that. We tried like different interfaces. They were all working only with MetaMask. It was very confusing for newcomers. And all of that together led to this idea of creating something that would be much simpler, that would allow a broader community to access DeFi and access multiple protocols. And it now proves to be the case. So essentially, it's impossible to do everything yourself. If you first come to a website like 𝗨𝗶𝗵𝗵-𝗶, you would have zero clue what's going on there. So we essentially help people to get their hands on DeFi and start off their DeFi journey and continue their DeFi journey as they scale up and find more opportunities elsewhere.
That website is legit. I think it's yieldfarmer.info. Really solid site. Like super cool how it connects you to your MetaMask and then to the protocol. I was doing it for Yams, and I'm just like I'm refreshing it every 5 minutes to see what that hourly ROI is. Just like it's super cool site.
Yeah, it is. It is. I do like the front end of Yam as well. Kind of fresh and made of emojis, in the ethos
what's
of
with
crypto
all these
and DeFi farming.
these fruit and vegetable coins?
I think DeFi itself is turning into a meme in a way with the recent growth, and now it feels like Compound was ages away. But it was kind of like what 2 months? I don't even remember. Or 3, max 3 months away.
That's kind of what sparked the whole like craze of DeFi. Like, have you guys seen a total influx of users after that whole comp thing came about and the platform was launched and whatnot?
Absolutely. That's an easy answer. We grew 6 times. So in July's numbers, we were 6 times more than May. So it was crazy growth, and it's still happening. So it's still going. It's not as fast as it was in July, but it's still pretty wild, I would say. And I don't know how much more the new yield farming opportunities would bring, but DeFi is definitely getting super hot right now.
And how has that affected the day-to-day at Zerion? Like, what was your day-to-day maybe when you were first getting started, and then, when Compound, what did you see that changed? And then, transition to now with Yams and 𝗰𝗶, how has your day-to-day changed once again?
Yeah. That's a great question. Things are indeed different these days than they were before. So essentially, just to give you an example, we were out for a few days, for like 3 days. Last 3 days, we were out for our friend's bachelor's party. So he's getting married, and all of the management team, we were out for a few days. And like, I just came back today, and the whole thing is, like with Yams just launched and a bunch of other things happened already. I'm like already too late for many things, and the new listings are just constantly hitting our backlog. So people are just requesting a bunch of new stuff that we haven't ever heard about. And which is making 10x returns in like 2 days. So it's getting kind of crazy, but it's a good feeling. We're growing. We're trying to serve our users as much as we can and as fast as we can. Trying not to fall as we do frequently now, as we're having much higher load. But yeah, it's great to be living through this space and great to be prepared because we were kind of waiting for this moment and anticipating the growth, but I didn't know when exactly it's going to happen. So my kind of gut feeling was, let's try to not think about it. Let's try to build something that would work and that would allow us to scale. And then whenever it comes, we will be prepared. So we are prepared by 95%. I would say.
Yeah. So what's the team like? Like, what is the team structure kind of like? And due to this upburst in demand, any sort of new traffic, like, are you guys hiring? Are you guys looking for help? Where are you at as far as the team goes?
Yeah, so the team, we kind of settled on the team half a year ago, right after we announced our round. But now we're definitely facing some lack of resources. So we're thinking about hiring more people. In terms of how the team currently looks like, we are 13 people, and I think 11 are full-time. Yeah, 12 actually now. Yeah, 12 people are full-time.
And all remote, right? All throughout, or in cool.
Everyone is remote. We did try for about a year and a half ago, we did try to be not remote for a bit, but it didn't really work. So I mean, it's kind of wasting a lot of time on commuting back and forth. So we were initially remote because I was in the US studying, and my other co-founders, they were in other places. So we just started like that, and that continued to be the case. And we just, I think, developed it's part of the company culture right now to be remote. And that's that played out nicely in the recent events. We didn't even notice any impact on the productivity on our side.
And you mentioned you had just recently decided to you raise your round. Could you talk a little bit more about that and maybe the next steps that you see for Zerion?
We haven't decided on the dates yet. So we did raise our first round a year ago and announced it like about half a year ago in last December. But now with the current growth, we're thinking of raising another round. It feels like it's a good time right now to do that. And the ecosystem is kind of proving itself, which we were waiting for. So that validation is definitely sparking interest in investors. So we are getting a bunch of people reaching out and restarting the conversations from our past interactions, or just like some new folks are asking if we have a token. And
right.
Yeah, I was gonna say, when's the Zerion token coming out? Like, what's going on? How do you feel about that? Are you on the side of being tokenless? Like, would you like to keep it like that, or do you see a future where there could be a governance token or like a utility token that is used on the platform? Like, what are your thoughts on that as far as like a tokenization of the world goes, but like in Zerion's case?
That's a really good one. We kind of entered the market when there was like a huge bear market, and everything was just going down constantly, and we kind of developed this understanding that it's actually easier and better for the company to be in equity, because it first attracts better investors and allows people to retain value, and it's less speculative and more fundamentals based.
Yeah, it's less scammy too.
Yeah, so that's the mentality. But at the same time, I do recognize the importance of tokens, and I'm a huge fan of governance tokens and overall moving from outdated kind of antique and form of capital, which is equity, and moving into tokenized versions of that. And I think we are pretty much getting there with stuff like compound governance. It's essentially getting to the point where it can be compared to equity in one way or another. So I'm getting kind of re-excited about all of that process, and eventually I think that's going to be inevitable, that we convert all the Zerion shares into equity at some point. But in terms of the utility tokens, we will only launch stuff that we think makes sense, that we think is not purely speculative or just for fun. We will launch it if we see the real utility behind that. So we're contemplating different plans. If we all agree on something, we'll let people know.
That's awesome.
Solid. Yeah, I don't know how I feel about the token thing. Like it's like speculative and kind of sketchy, but then it's also like, isn't that kind of what it's supposed to be all about? Like the governance and giving the community that ability to kind of vote and have their say.
Yeah. I definitely agree with that.
Yeah, and it sounds like, even though a company might start initially with equity and offering a private sale, they can transition into a decentralized, network and a more open model, which sounds like Zerion is open to. Can you talk a little bit about that offering that you have for your round? Like, what is the business model of Zerion? On the face of it, it doesn't charge for anything. So I'm kind of curious how Zerion makes money, and if they do plan to have a round, or you guys already have had a round, so how are you making that offer to investors?
Yeah, first I just wanted to add to the previous point about transitioning from shares to tokens. I kind of view that closer to becoming public, because you cannot control anything that happens on the secondary market right after you go and announce your token. So essentially, I think similar rules, not in a formal sense, but similar rules should apply if you are going public. So essentially, when you feel like the company is performing to the extent that is first safe for investors and it's generating revenue by itself without a speculative demand, that's I think the right time to start transitioning or somewhere close. And I think Compound was on the right track with that. So they were generating not a lot of revenue, but some revenue, and they kind of did transition to the open model and kind of decided, okay, it actually felt like an IPO case for them. So that just to add to the previous point. In terms of the business model, so essentially I would say here that startups are more about growth especially in the early stages. It's less about generating money as of right now, and it's more about growing fast. So that's essentially what we were selling on our first round to the investors. As the space is growing, and yes, it's very unclear right now how people are ever going to make money out of this, but the space is so exciting, you cannot miss the opportunity to capture users here and create companies in this space. So I think is still the case. It is. I think what has proven to be the most successful business model is just to launch a token, in quotes. I would prefer not to go on that route right away. So it's kind of like a safe, kind of like a hedge that all people have in the space. Let's just launch a token. But I think it's a bit short-minded. So essentially, we are thinking of more sustainable ways to monetize. And one of them is already backed in the DeFi SDK. I don't know if you want to go into details on how it works, but in reality, DeFi SDK is a middleware that we created to interface with different protocols in the DeFi space. So the business model that is baked in there is that people who are monetizing their integrations through DeFi SDK, they pay a commission to Zerion as a developer of DeFi SDK. So essentially, if you have like a wallet or you have an exchange or another DeFi interface, if you want to have access to different protocols and you want to have interactions with different protocols, at the same time you are charging your users for that service, let's say a 1% commission. So 20% of the profit would go to Zerion. So that's the business model we are. But it's only one that we are evaluating. So it's already kind of part of the DeFi SDK, but the interactive version is on the audit right now. So it's going to be live sometime in August or September, and we'll see if other people are going to integrate DeFi SDK as well and see how it goes.
Yeah, that's a really interesting thought. The kind of idea to create a non-profit, in quotes, protocol that you can either choose to govern with a token, right? And so that you can have this asset, you can have a pre-mine it if you want, so you can pay out the founders and the team, right? And then you can launch it publicly, and you still have this protocol that is still not for profit. Now, obviously, there's a whole, plethora of ways to make money with it, but this idea in DeFi of either having a token or not, what's really stood out to me compared to like the traditional world is that Compound, Aave, Zerion, while they are all different, they all kind of follow that same idea of like, we are here to kind of help the greater community, if you will, by providing this resource. It's not necessarily for profit, but there is revenues and there is a monetization strategy that comes off of it, but it's not necessarily at the expense of the user, which is really interesting in terms of like a shift from what we do currently with all businesses out there.
Yeah, I would say here that it's, I think that's a property of nascent markets. In essence, if you think of the internet in the beginning, people didn't have a clue. So first of all, there was mainly scientists sitting out there and trying and experimenting with HTML and like sending papers over wires to each other. So people were like, first they were not looking to monetize that at all, and they didn't even know how exactly they're going to monetize that. So I think something similar is happening in DeFi. So it's a very nascent market. People have zero clue how it's going to work. It changes every 2 months to a completely different landscape. And that means essentially that if you are trying to extract some rent as a company or as a company in the space, you are doomed because people are just going to leave you and like other companies are going to emerge. So I think that's collaborative spirit that is driving the ecosystem right now is great, and it's going to continue, but only up until the point when the market becomes like big, and that's the point where people will be thinking of making more money rather than helping each other out.
So how are you planning for the future like that? You mentioned Zerion has some interactive functionality that's coming out in August or September. What are those new functions, and kind of how do you see those developing?
Yeah, that essentially is part of our large roadmap. I kind of think of it in 3 stages. So we currently have monitoring, which is or tracking of different DeFi assets. So we support essentially almost every protocol out there. So that's the first big piece that we have already covered. But from tracking, we move into execution and then to best execution. So execution is already part of Zerion. So yes, you can do some execution on Zerion. We use, let's say, for the borrowing, we use Maker and Compound for deposits, we have Compound, and for trading, we have 0x integrated, which is already giving users a better quotes. But essentially, what we are aiming for is to have a good understanding as a product, understanding of what's the best way to execute specific transactions and what are the options available to the user to execute anything. So let's say you open, and that is part of like the whole redesign that happened just recently. So in the new design, you can go to any asset, you can click on like any asset in your portfolio or even search for new ones, and you'd land on the page with this asset, with the performance and everything. So the next step would just look like you would see on the right, you would see all the options that you can do with this asset. So first starting with just purchasing it, and then moving on to staking or
oh wow,
yeah, but that's
so it brings it all into one.
Yeah, that's what,
and you can like choose
exactly. That's like the best execution part. So buying as well. So the concept here is that even price aggregators like 1inch or 0x, they sometimes are not the best way to execute a trade because of the gas fees, and that I think is going to just escalate even more. So for some trades, just using Uniswap by itself is a better deal rather than going to any aggregator, because they would add a layer of complexity in the front. So we would try to be, to provide the best thing for the user in terms of the spending and like how much tokens they would get. So that's the ultimate goal.
So correct me if I'm wrong, but now Zerion starts to look a lot like, one of these protocols like 𝗵𝗶 or YAMS, where it kind of arbitrages between different opportunities. But what's really cool about Zerion is it's all transparent. You can pick and choose what you want to do. It sounds like Zerion is presenting you the option of, oh, look, there's a better opportunity over here for some more yield. Go and interact with it if you want. Whereas 𝗵𝗶 and YAMS, they're kind of like that black box that's doing it for you. Do I have a good understanding there?
Yeah, I think that's right. So I usually think of it as protocols versus interfaces, and the big difference here is that protocols, they are essentially limited to their own protocol from most of the times. Essentially, what I mean by that is that let's say YAM as an interface and as a protocol, they are interested in growing TVL in YAM ecosystem. But for a DeFi interface like us, it doesn't really matter. So we're not attached to any specific token or any specific protocol. So for us, we're like an unbiased, we can provide users with an unbiased view of, let's say, opportunities or APYs. And because these people who are building the protocols, they have the incentives of maybe even tweaking the APY such that it shows a higher number. But
yeah, keeping the users on their platform.
Yeah, exactly.
And the money locked in. Yeah.
And plus, that kind of has the incentives to make a riskier protocols, and we have seen that recently. So more riskier and riskier protocols and assets are appearing, which is fine as long as there is demand for that. But I'm just worried a bit about the whole ecosystem collapsing and a lot of people losing money. So we can act as as an unbiased arbiter of the space, and I think it's a good thing.
So yeah, that allows you guys to be a tad more flexible and, as you said, unbiased when it comes to that kind of stuff, like which protocols you would like to use, like the truth almost to what the rates are, right? Because like you said, there's no really incentive there to fib or to lie. Now, these new protocols that we're seeing pop up, just YFI and YAM in particular, YAM's completely unaudited, YFI is audited, but both have been launched with just a Medium post and a simple interface and a governance community that says their token's worth zero. Their tokens are now trading, hundreds or thousands of dollars. Where do we go with this? This is for you, Rob or Evgeny. Like, how do we take this idea of open finance and decentralization and like kind of put a tad of security and user, because like obviously it's our own money, right? We can do our own research, but how do we take this idea of open finance and kind of, put it in a place that is accessibly safe for hundreds of millions of users rather than just, the small amount of people who are high risk prone, right? Like who are down to just throw money in. Like, how do we take this idea and kind of make it more safe and secure? That's been on my mind a lot recently as far as this goes.
Yeah, that's a tough one. And we've been thinking about that a lot. And actually, our investors were asking us about like the compounding risk of different primitives stacked on top of each other. But the reality is that because we are directly interfacing with these different protocols, we are not exposed to the compounding risks of these protocols. But protocols themselves started to compound different components. So essentially, like 𝗏𝗏 is comprised of Y tokens, which are using multiple different platforms to manage yield. So that is already like 5 different platforms combined as a risk. And then Synthetix is doing something similar. So like the protocols are getting bigger in a sense. So they are just like absorbing different components and pieces of the DeFi puzzle, becoming more and more risky.
And that makes them more secure, though, right? Like, while you're saying that you think that makes them more risky, the way I view it is kind of, if there's more money locked up and there's more things aggregated within, say, the SNX platform, right, or the token, to me that signals that there's more users that are willing to put in the funds, so the greater community as a whole is stronger, thus more secure. Now, do you think that's wrong?
I would say it's kind of the opposite. So the assets are
really.
Yeah, in my view, so the assets are just, they're trying to generate as much yield as possible, and sometimes not thinking much about the security side of things. Or these funds are pretty coming from sophisticated people who did their research. But the reality is that like the larger the pie, the easier, I mean, the better target it is for the hackers. So it's more people are looking into the code and like looking into hacking this whole thing. And if you have 10 different components, each of them being not so audited or like only partially audited, you have this additional layered risk that is growing. And that's true. So that is what happened with D-Force, for instance. So it was like a naive fork of Compound, but essentially because of their lack of knowledge of the underlying Compound protocol to like a certain extent, they were listing assets that were dangerous in a way. And that led to the whole piece collapsing because you can steal other assets from the protocol. So and BZX was not the same, I would say, but still like So hacks will definitely will continue to happen.
Like all this aggregation, it gives the surface area, if you will, of the attack basis. Like it makes it much larger. It makes it much easier just kind of like poke a hole.
Yeah, but at the same time, go ahead.
I think of it like a tree, and because a lot of these protocols are stacked on top of each other, you have the roots at the bottom, and then that might be Compound, Curve, the basic ones, Synthetix, Balancer, the ones that the aggregators plug into,
right.
And then you got 𝗏𝗏, YAMS, and these other ones that stack on top and use those roots as the protocol.
Yeah.
So if the roots are bad, the entire tree is going to come crashing down. You need those strong roots because most of those layer 2, layer 3 solutions to generate more yield are just forks of the previous protocols.
Yeah. So like if one of the roots went down, it'd be a cascade in terms of this tree. And the way that it's going right now, this tree is not growing in a linear fashion. This tree is going freaking Mount Everest mode right now.
Literally,
yeah. Legit. Yeah.
Yeah, I think a good example of how that can collapse is Curve using Y tokens in the Y pool. And then Y tokens, they rebalance between Aave, Compound, DYDX, and something else. So essentially, if any of these underlying 4 components loses money, the Y token would lose, let's say, 1/4 roughly, or like depending on the current allocation, would lose this amount of money instantly. And that means all the Curve token holders would also lose that huge chunk of their money. So yeah, that is, that's why it is really important to audit the roots and other parts of the ecosystem. But at the same time, what is good about it and why it is better than actual, the normal finance is that these are not paper contracts. This is code that can be tested, that can be audited, and at some point will reach the state that, state-of-art governance modules, state-of-art tokens, as we kind of already did. And then as they're going to continue and merge, people are going to, these pieces will become more and more fail-safe, and you can safely use them as let's just build a new system. You kind of combine a few pieces together without worrying too much, and it works. So we'll get there, or we're not there yet.
Something interesting that I think is coming soon, right? Always coming soon, but is how Ethereum 2.0 and scaling is going to play into that. As that becomes integrated, if that is one of the most base roots, and it's going to be just newly launched, what are some problems that we could face? Kind of what do you see down the road as Ethereum 2.0 eventually comes out and becomes integrated?
I'll tell you what, right now, the biggest problem is 200 𝗋 gas. I'm trying to farm on yam. I'm trying to have fun on yam, and I'm paying $20 just to withdraw some yams. What's going on here, man?
My extension shows 249 for the fast transaction.
Pretty soon it's going to cost 1 Ethereum just to send 1 Ethereum.
Yeah. Because I was late for the party, I only started farming yam today.
Oh, you're a noob.
I'm still waiting for my returns to be higher than the gas fees I paid.
Yeah. It took a few hours last night when yams was $100. Now it's taking a few days or a few weeks, I guess.
No, it's almost there, I think. And maybe it's already more than that. I can check, but we are on the podcast. So
are you if you don't mind me asking, are you farming comp or which one? Which asset?
I was just farming whatever I had on my wallet, so which was Maker.
Which shot up like 30% today or something.
Yeah, that was a good one. Kind of,
So wait, Rob, did you ask about the scaling solutions? Kind of how that's going to play in, what challenges we think.
Yeah. So how you see that affecting these routes for the good or for the bad, and then how you see it affecting Zerion?
That's a good question. So we've been spending quite some time recently thinking about that. How we are planning to with the gas costs like that. It's essentially impossible. It kind of becomes like a threat for the whole ecosystem, and it becomes like a reach people play, which is an opposite of what we were here for. So that's why we were thinking a lot about ETH 2.0 and other scaling solutions, and we started talking with existing ones in order to see what is the way out. How do we get people to use it for much cheaper than what is currently available, and yeah, so essentially I think of Ethereum 2.0 as, it's going to be a big rebuild of the infrastructure in some sense, because it's kind of like multiple blockchains running in parallel that we have to support, but they are going to be, compatible with the existing ecosystem. So I think that's already removes part of the challenge. Yeah, I'm really excited to see what's going to be on the Ethereum 2.0. I was reading this article from Dragonfly on Bankless, and that was a pretty good one when he talks about different, kind of these islands or kind of like land that. Have you seen this?
I read that one too.
It's a good one.
The farm and the cities
server,
and the types of transactions that are going to go through. Super interesting.
I really like that analogy, and I think that's the easiest way to think about it. And DeFi is going to be, this Manhattan style city.
So for the users, for the listeners who don't understand that quick analogy, real quick, effectively what it is saying is there's going to be, quote unquote, areas of transactions on Ethereum that are going to be more like a city, where there's going to be a lot of rich people, quote unquote, or big funds who are using these for big transactions that need to get it done quickly. They'll be having like a good amount of transactions per day or per year, per week, and they'll be willing to pay these expensive fees for, as you would pay for a high-class shot of tequila as for $26. In New York City is the same kind of thought process towards paying those high gas fees. Then you've got like the rural farmers areas, which is on the complete opposite side, so folks who are kind of just using it for a day-to-day thing. So, not anything crazy. I guess like a few little transactions here or there, some farming of yield. And then you've got in the middle, which is kind of like the best of both worlds, where you'll get like, a medium-sized transactions, a medium pace, and all sorts of different uses, but effectively there's going to be like the city areas on one shard of Ethereum 2.0, which is going to be 1 out of 64, I think, that will have super high gas, high pace transactions, everything fast in the cities, and then all the way in the rural, you'll get the, on a different shard, slow transactions, small gas fees that kind of support a different use case. What else did I miss there, Evgeny?
Yeah, I think you covered it pretty nicely. One example I would add, so you covered who's going to use the Manhattan kind of shards, But one example of people who might be of like companies that might be interested in using the farmlands is something like oracles that would be just posting different price feeds, let's say, on like with very cheap transaction costs when the speed doesn't really matter, when you only worried about storage, and that's it.
Solid. So I think we're about out of time here. We got about 2 more minutes left. Rob, if you have any rapid fire questions or anything else, we can get them going. I've got a few on my mind, if you like.
Yeah, why don't you start us off?
Okay, cool. So I'm going to ask you a few questions. You can just answer them if you like. You can pass it if you don't want to. And yeah, a sentence or two answer or just a word or two would be great. So we'll start off. Ethereum killers in 2020. ADA, EOS, Cosmos. Are they going to stay? Are they here to go? Dead? What's going on?
My opinion didn't change much. So I kind of learned that with Bitcoin and Ethereum. So people were saying that Ethereum is going to die, and it just takes a 10x or even more than that improvement plus the network effect. So these two things are crucial for the success of the crypto network, and none of the folks you mentioned have that.
Cool. If you had to pick one celebrity to pitch the idea of DeFi in Zerion to, who would it be and why?
Let me think. That's a really good question. So let's say I would love if 𝗿𝗵𝗶𝗵𝗏 could pitch DeFi to folks, but I know that he is kind of against the whole thing. So that's a bummer.
That would be cool, though. That would be cool. So my last one is top 10 coins for DeFi. Give me 2 coins that you think are going to be in the top 10 in the coin market cap by the end of the year.
Oh, I would pass on this one. I'm not making predictions.
Okay, cool. No worries. Rob?
All right, I got one, but he said he's not going to make predictions. I'll still ask it anyway.
Sure.
YFI flips Bitcoin in price by the end of the year, yes or no?
Flips in price. That's likely.
It's at 5,000 now.
I think that's possible.
Yeah.
I think it's possible. Yeah.
Okay.
Oh, it is possible. Okay.
Solid.
All right.
Cool stuff. Well, guys, we'll wrap this up by saying none of this is financial advice. We are here to educate you all and to have a good time. We really enjoy this. We're going to soon have a bunch more stuff for you, sponsors and all sorts of cool content coming out. Evgeny, we really appreciate you coming on, man. You shared a lot of quality insights from me and Rob. I know I learned a lot and I had a good time. And yeah.
Thanks, Evgeny. Love to have you on again sometime. So
thank you, guys. It was a great time.
All right, guys.
Alrighty, guys. You guys take it easy, and we'll see you on the next episode.
Yeah, and check out Zerion.
Zerion.io.
Of course. We'll plug all
in
the
the
links.
bio.
Thanks for listening to the DeFi by Design podcast. Until next time, DeFi Slate Team.